Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really quite interesting situation taking place in the US now. As you see, many of the states are looking to reopen, but that's seen a pretty major spike in COVID cases, and now they're looking at watering down some of those openings now, and maybe even going back to a sort of a partial reopening rather than a full-blown opening. So obviously, while that's been good for the US economy and the fact that sort of creating jobs, and certainly the latest jobs data has been pretty encouraging for the last couple of months, seeing a pretty major rebound in terms of employment. There's still a major sort of pressure on the health system out there, especially in some of the southern states. The situation not really being helped by sort of almost sort of blind ignorance and just denial from many of the US sort of public that they won't catch the virus. There's very little sort of social distancing as states have looked to reopen, especially on the July the 4th holiday. There's been a lot of sort of public events, I say, with very little social distancing out there. And states like Arizona and Texas have seen a huge spike in cases as a result of this. Now, obviously, the Trump administration is taking quite a bit of sort of blame for this because, certainly there hasn't been, appears to be a great deal of sort of leadership coming from the top. President Trump really sort of refusing to wear a mask and, really sort of not purporting that people should be. And that appears to be in direct sort of conflict with the medical advice, certainly coming out from sort of Dr. Fauci, that is really advocating that a mask really could be very helpful in this situation. Potentially a further headache for President Trump as well. He could sort of get pulled into the Jeffrey Epstein investigations. Quite a few pictures circulating of Donald Trump as he was then. Now, obviously, the President of the United States. A picture with Jeffrey Epstein, and that could be again just another sort of sideshow and issue for the President to deal with. Which will just add further pressure to the administration as they're trying to sort of deal with obviously COVID, the economy, and then obviously the election November the 3rd. But in terms of markets, markets are still doing pretty well, really being led by the big sort of tech stocks, sort of Amazons, Googles, Microsofts of this world, and really sort of quite interesting with the lockdown. We saw potentially around sort of 3 to 5 years digitization sort of taking place in the space of sort of 2 to 3 months. And as yet, that hasn't really been fully incorporated into the sort of stock price, and potentially, some of these stocks have still got quite a way to run yet. The other issue as well is that, certainly if you look at it, it's sitting in the sort of money market funds in the US, that's close on $5 trillion. So, it does appear that investors are underinvested in US equities, and it'll just be very interesting to see what happens if that money is put to work. Now, as a result of this sort of reopening, oil has sort of increased a little bit as well, and sort of holding well above that sort of $35 a barrel. Similar case in the UK with the economy sort of trying to reopen. Certainly, many of the sort of pubs and restaurants have just started to reopen in the last weekend. In some areas, that has seen a little bit of an increase in cases, and in one of the major cities, Leicester, that has led back to a partial sort of lockdown. But then if you look at the rest of Europe, sort of Italy, Spain, sort of Greece, these borders are now being opened and looking to sort of get the best out of the summer months, and obviously the tourist sort of dollars, pounds, euros coming back through the economy. A little bit closer to home in Australia, we've seen a major flare-up in Victoria, and most noticeably in Melbourne, and that has now led to the Victoria-New South Wales border being closed. The rest of the states in Australia seem to have the situation pretty much under control. But so it's just going to be very interesting to see how this sort of plays through in Victoria. It looks like Melbourne could be in lockdown now for around sort of 6 weeks. The consequences for New Zealand, obviously that Trans-Tasman bubble sort of just gets pushed back further and further. You know, potentially now be very unlikely to see that before year end. But here in New Zealand has been a little bit of good news. The latest dairy auction saw a major increase in prices, up around sort of 14% for whole milk powders, and that's sort of taken prices back to sort of pre-COVID levels now. And that's certainly going to be a welcome boost for the farmers out there. You know, really have been doing it pretty tough with the drought and then obviously the COVID as well. As we now get into July, the election here in New Zealand is now just less than 3 months away, and it's just really starting to gear up now and sort of starting to get a little bit of momentum going forward. Latest polls still point to Labor having a sort of pretty convincing victory and should have enough seats to be able to govern on their own. But their lead is reducing all the time. That's really on the back of the sort of botch up with the sort of COVID quarantine cases that are coming back into New Zealand. You know, if you remember, New Zealand was sort of case free for around 3 weeks, sorry. And then we started to see these cases coming through as New Zealand started to return to New Zealand. And then obviously the botch up with the quarantine supervision and people getting out of quarantine, etc., etc. So in this low interest rate environment, if you are looking for options out there, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.